Hello everyone, let's get into the King Nvidia. This is the number one stock people are talking about with a massive sell-off yesterday. And I want to go over the details, what you should be looking at, and more importantly, doing the opposite, being a contrarian to what everyone is doing. So let's go ahead and dive deep. First, I just want to show you a chart here with Platform X. Now, if you want Platform X, there might be a link in the Telegram. I don't know. Maybe it's closed. Probably so. But you can see we started to roll over here on the daily, and we started triggering some big red candles where we broke. If you recall, go back a few weeks. In my videos, NVIDIA, we broke that 120 area and 130 area and 132 area of support yesterday. And then intraday, we really rolled over aggressively. If you recall, we were live in the, there we go, yesterday, very weak. We were live for VIP and Option Pit members, and I was like, let's avoid buying the morning dip when the stop was around 126, 127. Thankfully, we did because we traded down to 116. But what I want to do, more importantly, because I know all the pundits are saying buy the dip, this deep sea bottom fishing, what is it, deep seek or deep sack, whatever it's called, is a one-time event in China and it's not going to last. But what I want to do is give you all an absolutely blank chart perspective of NVIDIA so you can really gauge not only how to read the chart, but more importantly, know what the other hands are. So you're at the poker table, maybe you have pocket tens, and your opponent has pocket kings. Well, you're a dog, a 4-to-1 dog. But how can you still win without not even getting a 10? Maybe there's an ace on the flop. How can you maybe bluff your way, or bet your way, I should say, to a winning hand? So let's go to NVIDIA here, and let's just pull it up. Blank chart, daily. Now you can see I still have some of my support levels and everything like that from the previous video. But what I want to do, and we'll take off time and sales, and we don't need it. Actually, we'll keep it. I want to keep it pre-market so you guys can see the prints. And what I want to do now is pull up my Epic Pen and just show, we'll look at the daily, then we'll drill down intraday levels of where people are buying. So let's go ahead and look at NVIDIA and the emotional levels of where people have been buyers. So you have here, post earnings, you have people buying because the stock hit new highs, right? So you have your first buy level was probably up in here, and we'll give it a big B for buyers. So buyers stepping in, buying NVIDIA, probably up in here. So let's just say 150. Okay? Because new highs, post earnings, people get excited. So therefore, where's the max pain? Lower, and we felt it, right? People here might have buyers, but usually buyers buy near highs anticipating a breakout. And again, they got punished. We broke support. The sell orders, the stop orders get hit here, and then what happens? We rip higher. So that's human emotion. The stock is going down. People puke their shares down here. They cry, they sell. And then what happens? The stock goes higher, hits new highs. So what do people do? They buy. Now, where's the most pain after big buys? To the downside. And we saw that quickly. This was their event where they announced all the new robotics and the CES, I believe it was. People were all talking about it. CNBC, I think it got up to over 155 pre-market and then drastically went lower. So then we'll go into last week. Stock is looking good, 3-day breakout, big red candle, and then people are thinking again, right here on Friday, buy the dip, right? You often hear that. And even Kramer was pumping the stock up in here. And then what happens? The max pain, people get blown out, especially the people selling naked options, which is why I'm not a big fan of doing income or selling premium. So then let's go to an intraday, because this is very, very important. And what I want to do is look at the way NVIDIA has traded intraday between yesterday and this morning. So let's pull it up here and recall, let's look at it actually on a 5-minute. I want y'all to really get a deep dive into it. So let's just take off all these levels too. I want y'all to look at a blank chart. Now you can do this with any broker platform. I got a 5-minute chart up, and the shaded area is extended hours, so after hours. So over the weekend, the news comes out with the new Chinese AI firm. By the way, that CEO was actually a quant trader, so smart guy. So here we go. The opening bell happens, right? Here's Monday morning. People are all, oh my gosh, Nvidia's down so much. What's the initial reaction here when people wake up? So here's your 5, 6, 7, 8 a.m. and right at the market open. What's your initial reaction yesterday when you see the NASDAQ down 3% and Nvidia down, whatever it was, 15% or so? It's buy the dip, right? Buy the dip. That's going to be everyone's initial reaction. I went live, and the number one stock people were talking about was Nvidia. Buy it. Why? Because historically, and again, we got to go off human emotion. I got to put on my glasses, by the way. What happens when stock goes down? You buy the dip, you get rewarded, right? It happens, if you go back in history, almost every time, right? People were trained that way. So here we are, and again, people were wanting to buy the dip when shares were around 127. And I remember we were live, people were buying it. So what happens? You buy the dip, long-term or trading, and you get a typical H-cell pattern. So H-cell pattern is just like a lowercase h, where if we want to dive into it, I'll show you all what it looks like. H-cell pattern is a bearish pattern, so it's a lowercase h, and as the stock takes out the previous low, it moves lower. That's exactly what happened. You have Nvidia moving lower, so all these people who bought the dip either sold down here, especially as the stock did nothing intraday, which we were expecting. So then implied volatility comes out. So if you bought calls, you're really getting crushed. And you get stopped out, or you're just down money. Basically, any way you look at it, people are sad. They're crying tears of pain. And then this morning, you have the relief rally, or what I call the dead coyote bounce. We won't say the cat, the dead coyote bounce there. And what I mean by that is you have a relief rally. For example, all those people who bought, let's just say 127 yesterday, the stock they woke up to this morning with around, 125-ish we were pre-market. Let's just say 124. They're thinking, oh, thank gosh, it's going back up again. Woohoo. If it gets back to break even or above, I'm going to sell. So at 127, 126, if we get there, I'm going to sell. All that pain and stress I was yesterday, I'm out. Thank goodness I got saved. I got rewarded. Now, that would be a good time to go in and sell bear call spreads if we gapped up and held this 127. Why? Because those people would sell, volatility would go down, you sell upside calls, and you could collect some premium. If you do a $5 wide spread, you want to at least get $200, risking $300. Or if you're doing dollar wide spreads, you at least want to get about 35 cents, and you're risking 65 cents, something like that. But not so fast. Why? Because the market is always going to show the max pain. So if you thought buying the dip, you were going to get out easy and be happy up here, 125, 124, market already said, nope, you're going to feel pain again. And you can see we already traded down to 121. The stock is only up about $3 from the close yesterday. And if we go down to where people were buying yesterday, again, they bought 124, 126, 127. No one bought 118-ish or so. And if so, you're only going to be up about $3. But again, not so fast. The market makers, the greedy bastards, and they are. And why? Because, well, it's Wall Street finance. They got to make money. You think they're going to be broke and leave you holding the bag? Heck no, brother. Look at what they did. The implied move, $8.50. And this week, $10.50 for this Friday expiration. So the stock's only up $3, not $8.50. So the options, they price to perfection. If you bought calls yesterday, let's just say you were perfect and bought calls right at the close. You didn't get an $8.50 move to the upside. You got a $3 move to the upside. And those 121 calls are $4. That means the break even on those calls is 125. You're not even near there. The 122 calls are $3.50. Break even 125 and a half. You're not getting anywhere near there. So therefore, you bought calls, you're going to lose money. You bought puts, you're going to lose money. Who makes money? The market makers. What you can do is go in, and I think you still have ASML earnings, which will be a little bit effective. What you can do, if you can get some premium, is be very conservative and try to sell something like maybe the 128, 130 bear call spread. But even that, you're not getting any juice. 40 cents, that's horrible. Maybe the 128, 129 call spread, 20 cents, no juice. I would say if you want to trade it, you get a pop up to 126, 127. You look to sell the 130, 131 bear call spread. At least get 35 cents for it. So therefore, you're risking 65 to make 35. That's the only trade you should be doing here in Nvidia, selling premium, because if you have a fall through day to the downside, you can't really go and buy puts. I mean, the 110 puts are almost $2. That's insane. You would basically need $11 move lower between now and Friday. So more than the market makers anticipated move, which is about $10.50 till Friday. There's really nothing to do here. And now, if you look here at NVIDIA on the charts, again, let's just go, we'll use the platform X here. You really don't have any support till 101.90. Let me know in the comment section what you think of NVIDIA. Oh, and look, funny enough, guess who just came across the desk? Literally, as we were about 1 minute ago, Morgan Stanley cuts NVIDIA's target price to 152 from 166. Well, these people are donkeys living under a bridge. Buddy, Morgan, the shares are 118. You ain't even near 152, 156. You were wrong before, they'll be wrong again. Do the opposite of what all these Wall Street firms are doing. And when you do, you're going to make way more money. Your trading is going to be less stressful. And it's fun betting against the Wall Street analysts because, well, quite frankly, they're all crooks just trying to rob you of your money to make money for their shareholders. Again, like, subscribe, leave a comment, and we'll go over more stocks, especially if doomsday keeps happening in the crowded semiconductor, and maybe Bitcoin's next. Ooh, mister.